Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Mama Arif Najmi. To begin with our presentation, I will start with a brief introduction of our client's company. First of all, in order to start an audit planning, we need to know and understand about the client's business. Therefore, I will start with a brief background on Dutch Lady Milk Industry Berhad, Malaysia. Dutch Lady is a dairy products manufacturer and supplier in Malaysia with a vision to further strengthen their position as the leading dairy company and driving growth. It was incorporated in 1963 and was the first milk company in Malaysia to be listed in Bursa Malaysia in 1968. Its target market is people of all ages, ranging from infants to adults. Dutch Lady holding company is Royal Friesland Campina, a Dutch multinational corporation and one of the largest company in the world. Last but not least, Pemodalan Nasional Berhad is the second largest shareholder in the company.
Alright, my name is FAHMI and I'll be presenting on the materiality. First of all, earning from operation is chosen to be the benchmark used in determining the materiality as a whole, as Dutch Lady Milk Industry Berhad is a profit-making organisation. So if the combined misstatements of earning from operation are less than 2.925 million ringgit, the statements will be considered as fairly stated. But if the combined misstatements of earning from operation are more than 5.851 million ringgit, so the statements will not be considered as fairly stated. If the combined misstatements of earning from operation are in between, so the professional judgment is needed. And then there are two arbitrary requirements have been established in allocating the performance materiality levels across segments of the financial statements. So the first one is performance materiality for any account cannot exceed 50% of the preliminary judgment, which is 2.926 million ringgit. The second one is the sum of all performance materiality levels cannot exceed twice the preliminary judgment about materiality, which is 11.702 million ringgit. So we set the performance materiality to each account based on two factors. So the first one is the possibility of misstatements in the account balance, and the second one is the audit cost to audit the account.
Assalamualaikum. My name is NAQUIB and I'll be talking about the inherent risks of the company. So various aspects make up inherent risks and factors that must be considered while selecting audit evidence. Because Dutch Lady frequently engages with different international firms, foreign currency rate risk is one of the company's inherent hazards. The administration of these transactions necessitates complex assessments to appraise, increasing the risk of accounting inaccuracy. Additionally, related parties must be taken into account when determining inherent risk. Dutch Lady Milk Industries Berhad is active in many companies at the same time and has a large number of transactions with linked parties such as subsidiaries, affiliates, and others. The nature of related party relationships and transactions may, in some instances, expose financial statements to greater risk of insignificant misrepresentation than transactions with unrelated parties. As a result, there's a higher chance they misrepresented or failed to report intercompany interactions. Finally, another factor to consider is whether it's an initial or repeated engagement. Auditors gain experience and knowledge about the likelihood of misstatements after auditing a client for several years. Most auditors set a higher inherent risk in the first year of an audit and reduce it in subsequent years as they gain more knowledge about the client. For Dutch Lady's case, no material misstatements were found in the previous year and the current year, causing its inherent risk to be low.
Assalamualaikum warahmatullahi wabarakatuh. My name is DARWISH. I will be explaining the reason behind the significant increase or decrease in each account on Dutch Lady's financial statement from 2019 to 2020. First of all, in terms of sales revenue, there is a significant increase by approximately 34 million ringgit from 2019 to 2020. This is partly due to the rise in prices charged to the customers for most of their products offered. The company decided to increase prices for most of their products offered because of the increase in the cost of production. For the cost of sale, Dutch Lady incurred an increase of 81 million ringgit from the previous year. One of the main reasons is because in 2020, Dutch Lady incurred an increase of approximately 30 million ringgit in fixed manufacturing overhead costs. This includes the cost of rent of the production plants, depreciation expense of fixed assets, and many more. To ensure that the sales and purchases in the cost of sales transactions are reported in the correct accounting period, the auditor should conduct a cut-off test. This can be done by choosing a sample of sales and purchases invoices, inspecting the invoice date, tracing the date with the goods dispatch note, and then tracing the date. There have also been no significant changes in distribution, administrative, or other expenses over the last 2 years. As for the results from other operating activities, the significant decrease by 29% is mostly attributable to a decrease in gross profit plus other income.
Proceed to the next item, which is the interest income, where there is a significant increase by 50.11%. As Dutch Lady received a higher interest revenue from their interest-bearing assets in 2020, this allows them to generate a higher amount of interest income throughout the year. In getting the confirmation for the amount of interest income recognized, the auditor may obtain the audit evidence directly from the third party, which is the clients of Dutch Lady, and will be able to compare the amount of interest revenue. As for the tax expense, in 2020, although the company had an under-provision of tax expense in prior year of 428,000 ringgit, Dutch Lady still experienced a significant decrease by 30.29% in its tax expense. This is due to the decrease of reversal of temporary differences of 2.3 million ringgit in their deferred tax expense. The auditors shall confirm with the Inland Revenue Board to validate the amount of tax expense reported. The amounts recorded in the IRB's records should be accurate, allowing them to be matched to the company records. Next is the items under the balance sheet. First of all, the significant rise in the value of PPE in 2020 is due to the purchase of 3 parcels of freehold land for a total of 56.8 million ringgit for the construction of new manufacturing facilities in Bandar Baru and Step. In ascertaining both the quantity and the description of the PPE, physical examination can be done by the auditors. However, physical examination is insufficient evidence to prove that the client owns the assets. Therefore, the auditors must also conduct documentation inspections to determine proof of ownership of such assets. As for the intangible assets, the value has decreased significantly by 42.87% in the year of 2020. The major justification for this pattern is because the amount of amortization of the assets for the year of 2020 has excessively exceeded the new addition of the intangible assets. In order to verify whether the amortization of the intangible assets have been properly done, the auditors should test the valuation assertion of the intangible asset and specifically assess the reasonableness of the impairment estimated done by the client.
Next, from 2019 to 2020, trade and other receivables shows a decrease of 27.78%. So this outstanding reduction is contributed by the initiative taken by the company, which has entered into an agreement with a licensed financial institution to enable certain credit risks to be transferred to the financial institution, and the debts borne to the company will be assumed by the financial institution. So to confirm the accounts receivable as of the end of the reporting period, so the auditors should contact the financial institution involved directly and ask them about the information they are auditing through positive confirmation. On the other hand, a vital decline in the cash and bank balances by approximately 10% in 2020 is due to several factors. So one of them is that the company has decided to withdraw all its deposit placed with licensed banks, and no additional deposits are placed with licensed bank as at 31st December 2020. So auditors may use positive confirmations by asking banks to reply and confirm with the information provided. So the auditors should send back the confirmation letters to the bank to confirm the year-end balance, and it will be used to verify the balance as per the bank account to the bank confirmation letter. As for retained earnings, although for the year ended 31st December 2020, the company gained a net profit after tax of 73.363 million ringgit, the total retained earnings as at 31st December 2020 only increased by 22.163 million ringgit. So this is because the remaining profit for the year has been distributed among the shareholders of the company as dividends. So to examine the existence of dividends distributed to the shareholders, so the auditors may inspect supporting documents for the declaration of dividend before tracing the dividend declaration to the general ledger. So this procedure is important to verify the dividends distributed are recorded in the current accounting period or not. So next is for the lease liabilities, the company leased various assets with extension options. So in 2020 alone, the company has an addition of lease liabilities of 8.91 million. Besides, the LMI was charged interest for a total of 251,000 ringgit during the year. And then for the lease liabilities, it is crucial for auditors to assert whether the lease has been recorded in the correct accounting period or not. This is because if the LMI has a lease that commenced in the year or year end 2020, so the lease should also be recognized in 2020, which is on the lease commencement date.
So next, DLMI's trade and other payables climbed by 30.6 million from 2019 to 2020, a significant increase from the prior year. The increase of other payables in 2020 is mainly due to a higher petty expenses and supplies payable. To verify the accuracy and existence of accounts payable, the auditors may require positive confirmation from the client suppliers. This confirmation will require suppliers to review the information, complete the form, and then respond directly to auditors whether or not the information is correct. The total derivative financial liabilities for DLMI increased notably by 13.41% from 2019 to 2020. The increase of these liabilities is due to the fact that there is an increase of forward exchange contracts that are used to manage the foreign currency exposures. The auditors may assert the existence of the derivative financial liabilities, especially the existence of the additional forward exchange contracts. Existence assertions, which can be done by physically inspecting the derivative contract, can address whether the derivatives reported in the financial statements exist at the date of the statement of financial position. Moving on to the next slide. Proceed to the next part of our discussion, which is the financial ratios analysis. Let's start with liquidity ratios. To begin with, in terms of current ratio, DLMI shows a lower current ratio in 2020 than in 2019. This means that in 2019, the DLMI was able to maximize current assets on its balance sheets to service its payables or current debt significantly better than in 2020. The lower current ratio of DLMI in 2020 is mostly attributable to a smaller number of current assets in 2020 than in 2019, which shows a decrease of 26,025 ringgit. Next, in 2020, DLMI had a slightly lower quick ratio than in the previous year, with a difference of 19%. The higher cost of inventories in 2020 is one of the reasons for the reduction of this quick ratio. Among the items that contributed to this increase in inventory volume are the increase of amount for finished goods and raw materials. As a result, DLMI's ability to pay off their current liabilities without selling their inventory is also reduced.
For profitability ratio, it involves 6 different ratios, including gross profit margin, operating profit margin, net profit margin, and many more. First of all, the gross profit margin of HAMIS has decreased from 37.9% in 2019 to 32.4% in 2020, indicating a 5.5% decrease in 2020. This may be as a result of rising costs of global dairy raw materials. Next, in terms of operating profit margin, HAMIS shows a decrease from 13.2% in 2019 to 9.1% in 2020. Although the firm was still able to reduce its net operating costs in 2020, a massive increase in the company's cost of sales has caused the decrease in operating profit margin. Then we have HAMIS net profit margin, which drops by 3%. This reduction is contributed by several factors, including a decrease in financing costs. Subsequently, HAMIS earnings per share has also dropped by 46.24% from 2019 to 2020. This may be due to the fact that the corporation has become less lucrative and has less profit to distribute to its stockholders. Moreover, because of the lower return on assets ratio of just 14.71% in 2020 compared to 23.21% in 2019, it actually suggests that SYED may have over-invested in assets that have failed to generate revenue growth. Lastly, in terms of return on equity, there is also a remarkable reduction of return on equity amounting to 27.25%. It indicates that SYED has become less efficient in utilizing shareholder capital for profit production. To summarize, over these 2 years, SYED's financial performance has actually deteriorated. Even though they were able to increase revenue, they were unable to increase their net profit in 2020, since the cost of sales in 2020 compared to 2019 is much higher. In conclusion, there are several procedures that can be taken by auditors in determining whether SYED Industries provides a true and fair view of financial statements. One of them is by assessing the inherent risk and control risk of the client. Then the auditors also have to decide what is the materiality level for the company by setting preliminary judgment of materiality and performance materiality. Finally, the auditors need to perform the preliminary analytical procedure in order to identify the transactions with potential misstatements. That's all from us. Thank you.